Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at stocks that were in play today. Okay, first up is DGLT. Okay, this did get halted today. If you look down here, when it closed today, it was up 447% on the day. We had alerted this play last week when it had formed 7 red candles in a row, and then it formed this green candle on a volume spike. So it was the largest volume of the year, and so it caught our eye. We had been watching it for a close above EMA 4. Notice how it had been resistance, the pink line, and so today it did break above that level, and that was the signal that it was in play. And then it was running hard, but it got halted. There's some news out today about the company possibly either filing for bankruptcy or they had an offer, an all cash offer to be bought out. The price tag on the offer was not announced, so the SEC is halted. I'm not sure why, but they need more information before this resumes trading. When this does resume trading, no telling where it's going to open, but let's just say, for argument's sake, it opens right here where it closed. The next key resistance level is going to be the bottom of this gap up here at 160. It's going to need to break the bottom of the gap level. If you can do that, then you could possibly see a gap fill up here to just a little above 180. So 160 is the next target to the upside, the bottom of the gap level. If it hits that, it might possibly fill the gap. To the downside, if it breaks back below EMA 8, which is currently at 71 cents, that's going to be a major red flag. For DGLT to remain in play, it needs to be forming candles above EMA's 4 and 8 support. Check out the volume. It was the largest volume day of the year. So we'll see what happens. It all depends on the halt. If you look here at the 10-day 30-minute chart, you can see here the action, how there was really big volume, and then it's got the it was breaking out, had a nice run going above EMA 4, hit all the way up here. Target up here is the bottom of the gap, which is just below 160, and so and then you can see the top of the gaps up here, so at about a little above 180. So those are the upward targets. Down below, the same thing for this chart. It needs to be riding EMA's 4 and 8 support higher to be in play. If it opens up and it drops below those levels, that'll be your big signal that it's no longer in play. So this is just we'll just have to see what happens, and see. We'll start charting it when it resumes trading. Okay, let's look at IDXG. Okay, this stock had really nice follow through today. This is a chart that we posted yesterday on our website, mychartcoach.com, and then they were posted in the chat as well. And so if you look here, yesterday the big move was the break above the middle Bollinger Band, which is the dotted purple line, and the 50-day simple moving average at 102 currently. That's the green line. So the close above both levels and the bottom of the gap level. So notice there was a gap back here in June between the top of the gap is the top of this candle, and then the bottom of the gap is down here. And so the close above the 3 key resistance levels was signaling more upside potential, and it did follow through nicely today. There was a gap up open, so now there is an unfilled gap on the chart between the high of day yesterday and low of day today. So on a pullback, if the share price does pull back, EMA 4 currently at 113 is the reload, or is the first support level, and then you could possibly see the gap fill. So yeah, if you look here, there's a gap in between these 2 wicks here, and so that when a stock hits resistance and starts pulling back, the gap fill becomes the target, and many times once the gap fills, that's a climax, and then you see a reversal. And so if you take that theory that we use and you apply it to the situation right now, it is showing that IDXG is hitting an upward gap fill. So there's a gap back here, and then these 3 candles have filled the gap. They've hit the top of the gap. There is a space still here in the middle, but yeah, it broke above the bottom of the gap, and then today it hit the top of the gap, and notice how thought became resistance. It was high of day, and the share price pulled back. So going forward, if IDXG fails to break that 150 resistance level, the candles could consolidate and pull back and fill the gap below. Going forward, if it can break above that 150 level, then the next target is the 100-day simple moving average at 166. It will need to close above that level and turn it into support if it's going to make a run up here to the 200 and 300-day simple moving averages in the future. So yeah, this is a really nice 3-day move. If you look up here, you've got RSI at 74 and Fasto at 84, so it is at overbought levels, and you've got this big spike on ADX, which is very bullish, but it is showing that it was a strong move. Down here in MACD, it's just getting going. It's just bouncing off here, and there was just a recent parabolic SAR bullish flip. So you know, this could keep pushing higher. It's going to all come down to getting above that bottom of the gap level and then breaking above the 100-day simple moving average. If it closes above the 100-day simple moving average tomorrow, that would be super bullish. If it could turn the level into support, and you could potentially see a run up to that 200 and 300-day simple moving averages. The only thing is it would have to head higher in the overbought power zone on RSI and Fasto. You know, parabolic SAR and MACD are both signaling that this could be the start of another push higher. So we'll see if this is going to be the top, or if it can break through resistance tomorrow. Okay, let's look at LINU. Okay, this ended up closing really strong. I'm not sure if this is the right price here. I think it might be more like at 27, 28 right now as opposed to 29. But yeah, this is pushing it to a high of day close. The key on this chart is we had been tracking this play, and what we had been looking for was a double bottom off of this low from back here in May. And so notice how that was big support down there in this 16, 17 support zone, and then notice how the share price came all the way down to that level and held. And so we were looking at what we'd been looking for is a close above this pink line. Notice how all these candles have closed below that pink line all the way until you get up here when it was in an uptrend. And so what we'd been looking for is a break above that level, and that finally happened today. We wanted to see it close above it, and you know, we put out alerts that it was heating up, and then yeah, it just kept taking off and pushing harder and harder into the close, and it ended up closing above the middle Bollinger Band, so that was super bullish. That's the key level to hold in a pullback, 0.23. As long as it can turn the middle Bollinger Band into support, a new uptrend should begin. If it closes back below the middle Bollinger Band, it will no longer be in play. Now to the upside, you can see here the 200-day simple moving average is at 30, and then the 100-day simple moving average is just above it, about 32. Those are going to be two big levels to break. I mean, you've got the moving averages lined up here with the 50 above there, and then the ultimate top up here is the 300 at 44. So if we go back and look at history and see how this ran last time, you can see when it broke above the 50 and the 200-day simple moving averages and the 100. It closed above all three of those levels after testing them, and then it ended up running to the 300 where it found resistance and it pulled back. So we'll see if this can make its way back to the 300-day simple moving average. That will be the key level this time to turn into support. If it fails to do that, it could be like last time where it signals a top and it pulls back. This is going to be a really tough resistance level to break between 30 and 32, because you also have the upper Bollinger Band, so it's going to have to bust through three key resistance levels to head higher. If it fails to break, you've got to see that middle Bollinger Band hold, and then yeah, look down here, it's on a big volume spike. Notice it's the biggest volume since back here in June. And the other thing that's interesting is you've got MACD down here with the bullish crossover, you know, so it's MACD is heating up, and then you know, it was pinched down here. There was a recent bullish crossover, and then the other thing is there's a parabolic SAR bullish flip. So notice the parabolic SAR, SAR stands for stop and reverse, and so notice as there was a breakout here and the candles were heading higher, the dots were below the candles. Okay, and then when the share price started dropping, you could see right here the PSAR level got hit when the share price dropped back down to this level, and then the dots flipped above the candles. And so this is the first time that the dots have been below the candles since all the way up here in June, on June 12th. So that's a big signal that there's a bullish change in trend occurring. Okay, so yeah, let's look at DCTH. Yeah, this had a really nice move today. Congrats, everybody. I know this is a Stock Twit's favorite. It might be one of the most heavily discussed stocks on Stock Twist. It seems like there's a non-stop 24 hours a day discussion on the DCTH board. So congrats, everyone. You got a close today above 50 on RSI, so it's at 57. That was really strong. You want to see RSI stay above 50 if you're a bull. There's lots of room to run to the 70 overbought level. The Fasto did close at 94, so it is at the overbought power zone level. It will need to stay above 80 to head higher. This is the last chart that we posted on this stock, and then yeah, I just wanted to show you this because you know, the Fasto here, when it was down at this bottom level, it was at 5.53 when we made this chart. It was down here at the bottom, and that notice how that was the bottom of this drop. It was on a multi-day drop. It had dropped for 7 days in a row, and you know, we were trying to see if it was going to fill this gap down here. There's a gap between these two candles back here in June, and so when it was dropping hard, we were thinking maybe this gap would fill. It didn't quite get to the gap fill level. It never hit the bottom of the gap, so there still is an unfilled gap below, down to 6 cents. But Fasto here, getting to these extreme oversold levels, was signaling and being on a 7-day drop that it was getting near the bottom, and so it did help to signal the bottom. It bounced after forming this candle, and then it's been heading higher ever since. You know, it backfilled, held support, and then today the big move was the bullish close above the 50-day simple moving average, currently at 13 cents. So bulls want to see that level turn into support. Going forward, candles forming above the middle Bollinger Band, which is currently at 12, the dotted purple line, and then 50-day simple moving average at 13. Candles forming above both of those levels is going to signal more upside potential, and that's going to signal that it could potentially run back up here into the 20s. Okay, so this is the next big resistance zone to break. You've got the high close up here at about 27, and then you've got another key resistance zone down here, or up here at 22. You know, there's going to be the upper Bollinger Band right here is lined up with this close here on July the 18th, which is at 16 cents, and that's going to be the next really big level to break. So it's got to bust through that upper Bollinger Band to get moving higher. A lot of times the upper Bollinger Band signals the top of a run. Keep in mind there are 3 green volume bars in a row. So the big thing here is just being able to turn this middle Bollinger Band and 50-day simple moving average into support and start a new uptrend. There, like the last chart we were looking at, check out how there was a parabolic SAR bullish flip. You know, the green dots are now below the candles. The same thing. Notice how during the whole downtrend, the dots were above the candles, and then now they finally flipped above on the day that it broke back above the middle Bollinger Band. So that's a signal that a new uptrend is starting, along with the bullish crossover on MACD. This is on the 12, 26, and 9. So notice how MACD line is the black line, and it was below that blue purple line the entire time on the way down, and then it crossed above today. That signals that a possible new uptrend is starting, along with the MACD bull cross in the 8, 13, and 5. So they're all signals the chart is really heating up. It just needs to turn turn the middle Bollinger Band, the 50-day simple moving average into support, and then it could continue higher up back into those 20s. Okay, let's look at MNKD. Okay, this has actually been on a multi-day run here. If you look down here, there have been 6 green volume bars in a row. So besides this black candle and doji, you know, it's just been heading higher every single day for 6 days in a row. It started at the bottom down here, all the way down here at the lower Bollinger Band, the bottom of the channel. So when you're trading with the Bollinger Bands, the bottom, the lower Bollinger Band is the bottom of the channel, and the upper Bollinger Band is the top. And so notice how these 6 candles work their way all the way back to the upper Bollinger Band. That's the top of the channel. So what does the top of the channel mean? That is the sell zone. Okay, so this is the bottom of the channel. You buy low, and then when it hits the top, you sell. And so you go back and forth until it busts through the top of the channel. And so today there was a very bullish development on the close above the 50-day simple moving average at 134, and then the close above the 100-day simple moving average at 129. That was really bullish, and it's been working on turning that middle Bollinger Band into support. So going forward, like if it can stay above that 50, the green line, then that will signal more upside potential. If you look back here on the move in July above the middle Bollinger Band and the 50-day simple moving average, it failed to hold and it pulled back. So history could repeat here. Mankind has a history of doing that, of disappointing. So, don't hold your breath in the 50-day simple moving average holding. When a stock has a history of giving back after making moves higher, you've got to be able to lock in gains when they're on the table. So going forward, if it can't hold this 50-day simple moving average, if you say a drop below, it's going to signal more consolidation. If it can stay above that level, if it can form another white candle tomorrow, that would be a bullish change in trend. And then it would need to break the closing price here on July 18th, which is 145. A close above that level, then you're talking about a possible run to 155, which is the June 27th close. And then ultimately for the bulls, what you really want to get to is the recent high close, which is back here on May 30th, which is at 165. That's the real big level on the chart. If it can get above that level, then you're talking about mankind finally breaking out higher. Look here at the how another bullish development today, which is very positive for the bulls. Is look how there's this downtrending channel. Okay, so you had there's channels within channels on charts, and so this green line, this descending resistance line was descending support, and so as it bounced off of here, and then notice the descending resistance. So it hit top, hit a top, hit a top, came down, hit a top yesterday, back at it, but today it broke above. So when you get a break above a big channel like this, many times that signals the stock wants to run higher. So that was a very nice move today. Well, on a pullback, you'd want to see that level turn into support. And notice how the red descending resistance line is lined up with that middle Bollinger Band and 100-day simple moving average. So it just shows you how important it is to turn that level into support in order for MNKD to head higher. There was a nice volume spike today, so it was the best volume in August, and you have to go back to the second week of July to see this type of volume. And then down here on MACD, you've got the nice recent bullish crossovers on both time frames. So that, along with and you have a parabolic SAR bullish flip. These are all signals that mankind could be trying to push higher and start a new uptrend. It just has to turn key levels into support. Okay, take a look at SHIP. We post stocks or charts on all the stocks, many of the penny stocks that are in the shipping sector. And when you have stocks like Dries and Tops and other names that people are familiar with that are running, that get talked about in social media, you always have to look at the laggards. And so SHIP was one of the laggards that we put out an alert on, keep an eye on, because it looked like the chart was setting up. And since other stocks in the sector were moving, it was primed to break resistance. And so today that finally happened. We got the technical development that we were looking for. Yesterday was the bullish close above the middle Bollinger Band. That was the first thing that we were looking for. And then if you caught our last shipping sector video, or you've been following or you're in our chat, or you've been following our alerts online, you'll know that we've been talking about this stock trying to break this middle Bollinger Band. That had been resistance, the dotted purple line, currently at 746, and so it did that yesterday finally. And then the key big level to break was this 50 and 100-day simple moving average. We'll basically say 80 cents. It needed to get above 80, and that did happen today. So the one red flag is there was a big pullback from high of day. Notice the long upper wick form. That does show profit taking, and it's not always what you want to see. That could be a signal that they pulled it back for people to load. We will know going forward whether or not SHIP remains in play by whether or not it can hold this green and gold line. Going forward, candles forming above that green and gold line, that signals more upside potential. If it drops below, that will signal it's no longer in play. It's that simple for the stock. Candles forming above, signal ride. Candles forming below, signal to exit. Really simple. If you look back here on the last time that SHIP ran, when it got above that 50-day simple moving average, look how that was the catalyst for the huge move. So it really got smoking once it got above that 50. So we'll see if it can make that kind of move. Before it had to get back above the 100. It's already gotten above both those levels. So as far as simple moving averages go, that's going to put the 200-day simple moving average at 115 as the next simple moving average target. And notice how that's lining up with the top of the last run at 120. So that's the big upward level. The next key resistance level is 90, and just above 90, that's the closing price back here on the 26th of June. And then the dollar level. $1 is always a big level in penny land when stocks are trading below. Notice how it came close to that level and pulled back. It's going to have to get back above the dollar land and turn it into support to head higher. Notice when it got above that level back here in June and July, how many times it bounced off of the dollar level and then it finally broke here and then dropped further. So when stocks are trading below $1 and then they get above, it's very, very important that they hold that support level. And for many of these stocks, they need to be above that level to stay for their NASDAQ listing requirements to be able to be on the big exchange. If the share price stays below $1 for too long, they could get demoted down to the OTC and become an over-the-counter stock. So yeah, so that we can get into that another time. But yeah, look here at MACD. You've got the bullish crossovers as well on MACD, so that's another signal that the chart is heating up. And then let's look at SCON. Okay, this is a dead cat bounce play. Okay, this stock has been under big pressure. It had this huge drop, came all the way down. It formed a bullish reversal pattern yesterday. That pattern has been confirmed today. It did close above EMA 4. That was the last close above EMA 4 since back here on July the 31st. So in order for SCON to be in play, it needs to stay above that level. It's got a lot of work to do. This is a really ugly chart. It needs to get above EMA 8 at 110. That's the next key resistance level to break. And a new uptrend will not officially begin until it turns that middle Bollinger Band at 128 into support. So yeah, this is a dead cat bounce play. It had nice follow through. It's a low volume play as well. It's got to stay above EMA 4 for it to be in play. So keep that in mind. Look at CDTI here. This is another low volume stock. It's another one of those bouncing off the bottom type plays. And it came down, and then today it did the same thing as SCON. It finally closed above EMA 4. We actually have like quite a few of these same charts right now. There's multiple stocks with this similar setup that had been on big pullbacks that are trying to break resistance down at the bottom. So yeah, so whenever that happens, the big levels to break are EMAs 4 and 8. They have to stay above those levels in order to remain in play. The next key level for CDTI to break is going to be the middle Bollinger Band at $2. It needs to get above that level. If they can get back above that, then you could potentially see a run back up here to this cluster of moving averages. But right now it needs to hold EMA 13 at 184 to remain in play. If it drops below EMA 13, this is a very, very risky stock to hold, because it is in such a nasty downtrend that once they break a key resistance level like that, you want to see it stay above. If it breaks below, that's going to be a signal of weakness and a sign of weakness, and you don't want to hold a thinly traded stock like this if the chart is weak. Or if it's not staying above key resistance levels. There was a bullish reversal or a bullish crossover down here on the 8, 13, and 5, and then if this chart is going to heat up, you're going to see a bullish crossover on the 12, 26, and 9. And there was a PSAR bull flip yesterday, so that is a big signal the chart is changing tide here, and there was a bullish volume spike. So yeah, just keep an eye on it. And then to leave you with one final stock here, take a look at ECGR. This is a 5-day, 5-minute chart. And then just notice how tight the trading was into the close. There was no news today, but they had news on the 7th, I believe, and they said that they were going to have some news out in the next 14 days, the next 2 weeks, on some company updates. This is a marijuana sector play, vaporizers I think they're into or something. But yeah, what caught our eye was all this volume down here, and so we're going to see if this turns into something or not. If you look at the monthly chart, let's see here. So anyways, take a look at ECGR. The big volume spike. down at the bottom. You know, it just caught our eye. So just one of those, you know, over-the-counter lotto plays to keep an eye on. Okay, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.